Unraveling the 20th Century, 9 Phases of Western Monetary Collapse. Hey everyone, and welcome back to the Crypto Investor News Network. In today's video, we'll dive into the historical breakdown of Western monetary systems by examining the 9 distinct phases of the 20th century. We will explore how government intervention has played a significant role in the ongoing financial crises and consider the potential of cryptocurrencies to reshape the economic landscape. Let's take a look at each of the 9 phases in turn. 1. Phase 1. The classical gold standard, pre-World War I. A period of relative monetary stability, where countries adhered to a gold standard, allowing for stable exchange rates and limited government intervention in the financial system. 2. Phase 2. World War I and the interwar years. This phase saw the abandonment of the gold standard by many countries, leading to rampant inflation and unstable exchange rates as governments financed wartime spending through monetary expansion. 3. Phase 3. The Great Depression and currency devaluations. During the Great Depression, governments worldwide devalued their currencies to spur economic growth, further destabilizing international exchange rates and exacerbating the financial crisis. 4. Phase 4. The Bretton Woods System, 1944 to 1971. Established after World War II, the Bretton Woods system created a new international monetary order based on fixed exchange rates, with the US dollar pegged to gold. However, this system eventually faced mounting pressures and collapsed in 1971. 5. Phase 5. The Nixon shock and the end of the gold standard. In 1971, President Nixon suspended the convertibility of the US dollar to gold, effectively ending the gold standard and ushering in an era of floating exchange rates and rampant inflation. 6. Phase 6. The 1970s oil crisis and stagflation. The oil crisis of the 1970s led to skyrocketing inflation rates and economic stagnation in many Western countries, prompting governments to implement various monetary policies to stabilize their economies. 7. Phase 7. The 1980s and the rise of monetarism. In response to the failures of previous interventions, many governments adopted monetarist policies, focusing on controlling the money supply to combat inflation. While initially successful, these policies also faced their own set of problems. 8. Phase 8. The 1990s and the emergence of the euro. The creation of the euro in the 1990s aimed to create a single, stable currency for the European Union. However, the Eurozone crisis that emerged in the late 2000s exposed the flaws in this monetary union. 9. Phase 9. The 21st century and the rise of cryptocurrencies. The ongoing monetary crises of the 21st century have led many to seek alternatives to traditional financial systems. Cryptocurrencies, with their decentralized nature and secure means of exchange, have emerged as potential solutions to the cycle of intervention and crisis. As we can see, the 20th century was characterized by a series of government interventions that ultimately led to the instability and collapse of Western monetary systems. In this context, cryptocurrencies hold the key to breaking this cycle and ushering in a new era of financial stability. If you're interested in learning more about cryptocurrency and staying up to date with the latest news and developments, visit our website, cryptoinvestornewsnetwork.com. And remember to check out our shop for some awesome crypto merch. If you want to secure your digital assets, consider purchasing a Ledger hardware wallet. The links are in the description below. Before you go, please like, comment, and share this video, and follow us on Twitter.